It's Mark Yegge here, wealth architect and lifestyle investor. Let's take your life to the next level. Welcome to the Wealth Architect Podcast. Hey, everybody, it's Mark Yegge. Welcome to another edition of the Wealth Architect Podcast. So glad you're here. We have a great guest today. He's a former financial executive who teaches people how to use their current debts and expenses to grow their wealth outside of the traditional approaches. With his experience in accounting and finance, as well as his experience as the former chief financial architect of a cutting-edge financial firm, this gentleman has been able to help people all over the U.S. take advantage of the infinite banking concept. He hopes to teach people how to recapture, reuse, and recycle their own money over and over again so it stays inside of their family instead of making other people rich. Our guest today is Dr. Robert Scranton. Dr. Scranton, welcome. How are you?
I'm doing great, Mark. Thanks for the overly generous introduction there. Glad to be on the show today.
Glad to have you. Glad to have you. And, this is interesting because I've had some people talk about infinite banking to me and on the podcast and things like that. But, somehow it doesn't quite land with me sometimes. And, I want to know a little bit more about what you talk about when you talk about infinite banking. But I'd like to know how you got into it and what you do today to help people.
Oh, yeah. It's a really interesting story. I'd say it found me almost out of circumstance more than me seeking it out. I got my degree in business school at the University of Illinois in accounting and finance, and I moved up to Chicago after school and worked for a public accounting firm there, doing tax returns for large corporations and wealthy individuals and doing audits of companies and so forth. And I remember sitting in the meetings with all the other employees when they were going through the hey, this is our 401k plan that we're starting, and this is what you do so you can retire. Oh, okay. And I everybody else in the room seemed to be doing the same thing, and there's always comfort and doing what everybody else is doing. So I bought into that. I knew other people doing it. And, I kept contributing to that till 2008, 2009, when we had this financial kind of distress in the country. And I usually would get quarterly statements from, whoever the fiduciary was, I guess, of that plan or whatever. And I would check it and look at it. And I remember from one quarter to the next, I checked it and I noticed that my account had gone down by 45%. And so I called my financial advisor, said, "Hey, what's going on here?" And I guess that, the market had gone down so much in that short period of time. I'm like, this really sucks. I mean, I thought this was how I'm supposed to retire. And, I've been saving and scrimping and denying myself things I wanted to do or wanted to purchase and delaying gratification, so that I could build up this nest egg. And boom, overnight, it felt like half of it was wiped out. And I had no control over that at all. And I was trusting the financial people, the gurus, and I started thinking to myself, well, if this guy is so smart and, why didn't he tell me to put it into cash or take my money out of the market before it went down? And he didn't really have any good answers for me. And I got introduced to this infinite banking concept. And I thought, wow, that is pretty amazing and almost seems too good to be true. And so really, I was as excited as I was about it. I was super skeptical as well, because I thought, well, if this is so great and so amazing, why is it that with my degrees in accounting and finance and working in this industry, why have I never heard of this before? There's got to be something wrong here, or something smells fishy, or so I kind of had this personal quest using that analytical accounting brain to try to pick this concept apart or prove it was a scam or it wasn't true or it couldn't possibly be right. And looking back, and I feel like I just wasted a year and a half. I could have already started my own banking system, because ultimately I came to the conclusion everything that they were teaching me, everything I was reading about was 100% accurate, was completely true. This product had been around for over 200 years. It's something my dad had bought, started doing this for me, and his dad had done it for him, and his dad had done it for him. So going back like 4 generations. So it wasn't a brand new concept or something that just showed up on the scene one day. It's just nobody really talked about it or educated us about it in high school or college. And so I kind of went from like Paul, the biblical idea of Saul, the persecutor of the Christians, to Paul, the evangelist, like conversion, telling everybody I possibly could about this. And I've had my own infinite banking policies for about the last 15 years. I just got my statement February 8th, 2009. I started my first infinite banking policy. And so I've been doing this, and every piece of real estate that I've bought since that time, I've used in some way, shape, or form my banking system to help purchase, all those properties. Plus, I've got 3 cars in my garage. I've got all the money back for all the cars. Plus, I still have the cars sitting in my garage out there, and that seems almost fantastical, and it did to me till I actually did it myself. And we've got the math and some examples we can show people how they can do that themselves. I don't know how much of the money have you ever got back for any of the cars you've ever bought, driven, and owned over the course of your lifetime, Mark?
Well, I think that's a loaded question. You know the answer to that. Not a lot. Usually the cars end up in a
That's right.
trade-in or a
I
pile of
usually know
junk.
the answer to that one.
Exactly. Hey, it's Mark Yegge here to tell you about our cash flow machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for 2 to 4% a month of income and growth in your portfolio. And we have courses to teach you how to do this yourself or inside a mastermind community. And the best part of that is it only takes about 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA from $111,000 to over $500,000 in just 19 months without huge risk. I'm not telling you this to brag, just to show you that you can do this too. So to learn more about this program, go to cashflowmachine.io. That's cashflowmachine.io, and you can learn more. We've touched on kind of a brief 30,000 foot level of what that is, but let's delve into a little bit more about what it is so we can get our teeth around what infinite banking actually is. Sounds like some kind of insurance policy, right?
Well, yeah, I mean, it's really ultimately that just happens to be the product that we use for this system that we're creating of really taking back control of the banking aspect of our life. And so that we're in control, we're in the driver's seat, so that our clients, we'd like to get them in a position where they never are ever going to have to worry about getting sick or injured or having a work interruption or having to take care of a sick relative and losing their truck because they got behind 3 or 4 payments. When they're the banker and they're in control of the banking system, all they can do is I just asked the Bank of Rob if I could pause my payments for a few months because I'm in a stressed situation and I need to pause. And I'm more likely going to say yes to that. And so I can just pick up those payments later on. So it's really about taking control, getting as much of our cash into a tax-free environment as we possibly can and getting the government, the heck out of our hair. And then we don't have to worry about things like bank bailouts or bank bail-ins. That's something you're going to start hearing more and more about. A lot of people don't even know about that after that last financial crisis I talked about that I got affected with my retirement accounts. In 2012, they passed the Dodd-Frank Amendment, and they wrote into law the ability for banks to, instead of a bailout, if the government runs out of money, they could do a bail-in, and they could confiscate your savings account or mine to bail themselves out in the future. And most people have no idea that their money is at risk of that, ever happening. They go to the bank, they put their money in a bank. Completely forgot about that. It is only a year ago that 4 of the 10 largest banks in the United States, went out of business, failed completely. And but people, if you ask them, do a Jay Leno on the street, most people feel perfectly confident and comfortable with their money sitting in the bank. But if there was a massive bank run and we all were in a panic and you and I and everybody we knew drove down to the bank tomorrow morning when they first opened, we'd only get back about 6 or 7 cents on the dollar of everything that we have on deposit there, because that's all that's actually in the bank because of the fractional reserve lending. I'm sure your listeners know about that or have heard about that before as well.
Sure. So, okay. So you brought up an example of a truck. So I want to go buy a truck that's in my garage or, to put in my garage. How does that work? Like, how does this infinite banking thing do? Because right now, don't most people go get a loan or write a check for their truck? How would it work in under your scenario?
You're right. Most people either take a loan or they pay cash. And a lot of people that pay cash will tell me very proudly, like, oh, I don't take loans. I pay cash for my vehicles. Well, that's still costing you because even if you're saving the interest that you would have been paying the finance company, you still have lost the opportunity cost of what you could have done with that money by paying cash for the truck. Well, with our infinite banking system, we can both save the interest that we're paying and not lose the opportunity cost on the money when we go pay cash for it by simply running those dollars through our own banking system first, because of some very unique aspects and benefits of this infinite banking system that, quite frankly, Mark, just don't exist with any other financial product or tool on the planet that I'm aware of. And if you know something, please let me know, because I've been looking for the last 14 or 15 years. But the ability to go into our banking policy, like you said, you mentioned before, that the product that we're using for this banking system, I mean, if we could use a lawn chair to make this banking system work, we would use a lawn chair. It just so happens that the product that has the features and benefits necessary to make it function happens to be an overfunded whole life insurance policy from a mutual company that pays dividends. And so because of that, we build up cash values inside the policy. Now, what's interesting is when we go to buy that truck, and we take out a loan and use our life insurance policy as collateral. We're not actually taking the money out of the policy. What we're doing is taking a loan against the general fund of the insurance company, and we go buy the truck. And then we can set this up so instead of making those truck payments to Wells Fargo or some financing company, we make those payments back to ourselves, back to our bank. But what's interesting, even when we use those dollars from our banking system, from our life insurance policy to buy the truck, we still continue to earn, interest and dividends, and we see the cash growth and accumulation and compounding happen inside the policy, and it's never interrupted. A lot of people talk about compound interest or, describe compound interest, but very few people ever actually use it because they're putting that money in their Wells Fargo savings account and it is earning interest. They're paying taxes on it. But as soon as they go to make that purchase, guess how much interest they're earning, even a pitiful amount that it was in their savings account, once they take it out of there and they go buy their truck. Now they're earning zero interest. Whereas what we're doing, we continue to earn all the interest and dividends. We never stop the compounding, even for a single day, even while we've got that money borrowed out to purchase a truck or to invest in something. So it really allows us to utilize that same dollar multiple times, reuse it, recycle it, recapture it, and earn a rate in two places at the exact same time.
So Rob, why doesn't everybody use this? Why doesn't it happen where people are just taking advantage of this? It sounds really good, and you're making it sound like it's really easy.
It is relatively easy as long as you can qualify to get a life insurance policy. Some people can't, but when that's the case, we just look at other bodies or people we can insure, like an employee or a spouse or a child living at home, potentially. So it is relatively easy as long as you can pass, through the underwriting guidelines. But I asked myself that, like I told you when I first heard about this, Mark, I was like, man, I've got a degree in accounting and finance. I work in this industry. Why have I never heard about this?
Right.
And I think that's really the issue is most people have never heard of it. And of the people that have heard of it, they haven't taken the time to dive in and really, truly understand it. Because to your point, I really believe that if people knew about this and they understood it, everybody would be doing this because it just makes so much sense not to. It's been around for 200 years, and it's something that will improve everybody's financial life, no matter where their station is, what their income level is, high or low. It's going to improve what they're doing by running any of their dollars, whether they're investing them or whether they're using them to pay expenses or pay down debt, if they first run it through their own banking system, plus all the other aspects that we talk about that as well. But I think that's the real issue. But I mean, the rich people and the banks have been using this for forever. I realized that when I was talking to my guy that lost me 45%, I told you about, and I knew the investment company that he worked for was owned by Citibank. So I wanted to test this out. I went to a website called BOLI, stands for Bank Owned Life Insurance, where you can literally find out how much life insurance any bank in the country owns, whether that's Bank of America, Wells Fargo, the bank of your town where you live, and find out how much life insurance they own. And I looked that up and I saw that Citibank had 35% of all their assets in whole life insurance contracts, more than their real estate, more than their stocks and bonds combined, to the tune of tens and tens and tens and billions of dollars that they had in whole life insurance contracts. Because guess what? That's a product that they're guaranteed to get a return on. All those people that they have those contracts on are going to die, at some point in the future. And that's one of the only insurance contracts you'll ever have that, if you keep it during your lifetime, is
Right.
guaranteed that it's going to pay out.
So that's interesting. I mean, what's the catch then?
What's the catch?
Yeah.
I guess people, the only thing that I see people get into trouble with is they get excited in the beginning, and then they forget why they're doing this in the first place, or they don't continue that education process because
Ah,
there's so many layers to it, and then they drop out, or they stop, or they quit funding their policy, often right when it's just to the point where it's reaching that tipping point where it's paying them back more than they're putting into the policy. Like, my oldest policy is about 15 years old, and that's one of my happiest days of the year. I walk down my alley to the mailbox and I open up my statement and I see, well, there's that $10,000 deposit I made this year, and the cash value grew by $18,500. And that's guaranteed in a contract with the life insurance company. It only gets better and better every single year. At this point, I've gotten back every single dollar that I've ever infused into that banking system, and then some, and it just keeps getting better and better. I mean, how many people would like to have, 10 of those bank policies when they're 70 years old, that they put $10,000 infusion, and the insurance company immediately gives them 18,500 back? Because you want things that are guaranteed and that you can count on when you're no longer working or generating an income for yourself.
amazing. Wow. And that's the concept that a lot of people are talking about, and it's a cool concept called, what you call it, infinite banking.
Mhm.
And that's amazing. It's accessible to anybody that could get an insurance policy, right?
Yeah, I mean, you can start with as little as I think the insurance company guidelines, I talked to them one time to make sure we're putting enough extra cash in there. They could start with as little as, multiplying their age times 10 for that monthly premium deposit. And if you think about it, really is a kind of a supercharged savings account that comes with a bill that you pay every month. Like, we've all heard from financial gurus, you should be saving, 10% a month or 15% a month. And if you think about it that way, I'm just going to take that money in savings, instead of putting it in Wells Fargo, I'm going to put it in this much better banking system that's going to grow and accumulate, and I'm never going to have to pay taxes on the earnings if I borrow that out as loans now or later, or as part of my retirement, funding in the future, and I won't get penalized for using my own money like I would if I tried to borrow from my 401k, or I won't have to fill out forms at Wells Fargo if I try to use $10,000 or more of my own money. You got to fill out a bunch of paperwork to use your own money. With this, the insurance company doesn't care if you take out a loan, or if you don't pay the loan back, for that matter, because all they'll do
True.
is
Yeah.
subtract the amount you borrowed from the death benefit when you die anyway. So they're always going to be made whole, and they have that collateralized. So it's a lot more efficient way for real estate investors or people looking to invest money, quickly, that want to have cash available, kind of a wealth war chest, or fast deployment resource, to have those funds available in there too.
Amazing. I think it's really cool. I'm more of a I've been on the stock side of things, but every time I hear about this concept, I marvel at, why doesn't everybody do this? I know it's a few steps that we're not used to doing, but sometimes, you have to educate yourself. I'm a big believer in financial education, and I think you are too. And so, speaking of that, how can people find out and get educated a bit more about this, and
Yeah.
maybe a bit more about you?
Well, and we have a lot of stock investors. I tell them just put the money in your bank first and then go buy your stocks. And then
Sure.
you're doubling your rate.
Right.
So we have a website called yourfinancialiq.org. That's yourfinancialiq.org. And we have a free masterclass we made available for your podcast listeners. Mark, if they've found this interesting, talking about infinite banking, we have a full masterclass that goes through there's about 19 really amazing things about infinite banking that any one of them by themselves would compel a lot of people to want to start this banking system for themselves and their family and their future and their legacy. And we go through all of them, and they can get access to that by going on our website. And if they want to connect with us or have a deeper conversation, there's our calendar scheduling link. They can reach us that way too.
That's amazing. Well, yourfinancialiq.com, we'll link it in the show notes. And anything that I didn't ask you that I should have asked you? Because I feel like we're just scratching the surface here. Maybe there's something I should have asked you that will be like an epiphany for everybody listening and watching.
Well, an epiphany. Yeah, I guess that's one thing I would have everybody ask themselves if they would like to, put more of their money in a tax-free environment where they're getting the government the heck out of their hair. Nobody's watching or overseeing or keeping track of where their money's going when it's going in and out of there, and that's liquid, that's available, that has a lot of protections, from a wealth standpoint. Like if you live in California, watch out. Governor Newsom's going to probably get his wealth tax implemented. And so everything, your house, your boat, your cars, your cash in your bank is all going to be subject to that. Well, if you move a lot of your assets or your cash or your wealth into cash values in your whole life insurance policies, well, guess what? It's now legally, because again, these policies are 200 years old. So they predate the IRS, the income tax system. And those assets now have been legally declared to be part of the death benefit of your life insurance policy and not part of your assets. So they wouldn't get taxed as far as part of a wealth tax, and they wouldn't be subject typically to liens, judgments, IRS decisions, or lawsuits if there's somebody out there looking to confiscate your wealth by creating trouble or creating a lawsuit for you, because again, legally, it's considered part of the death benefits of your life insurance policy, even though it's as liquid as you going down to your local bank and making a withdrawal from there.
Yeah. Wow. Very cool. I think I need to get more educated and continue to learn about this. Because what happens is I'm probably not different from everybody else. We listen to a great podcast like this. We hear a lot of great benefits, and then we go back to our lives and we continue doing the same thing until we get slapped in the face again a year later, and now we've lost a year. So thank you for shedding the light, and hopefully that's enough kick in the butt for me and some other people to go out and find out a bit more about infinite banking. And I want to thank you, Dr. Robert Scranton, for being on the show and your time and your wisdom. And those of you who are watching and listening, remember what I always say: never give up your power in your health, your wealth, or your time. Have a great day, everybody. See you next time on the Wealth Architect Podcast.
You've been listening to the Wealth Architect Podcast with Mark Yegge. Follow us on iTunes, Spotify, or wherever you get your podcasts. Like and subscribe on YouTube. Share and tell your friends. See you soon.